Welcome back, my awesome people. Did you know that there is more than one Amazon? Well, what I mean is that there are other companies that are doing what Amazon is doing. So as of today, Amazon is a $1.7 trillion company and is the fourth largest company in the world. And although the companies I will be listing in this video are much smaller than Amazon, many of them are competing in and expanding into very large markets around the world, which has led many to believe that their opportunities could be as large as Amazon's. If that is the case, which I personally do believe in, it will be a great time to get in and hold long term. So let's get into it. First is Jumia from Africa. Ticker symbol JMIA, and it is aiming to become the online marketplace and digital payments provider for the entire African continent, which sounds like an amazing opportunity as Africa is currently becoming a developing continent, but it will be a rewarding long-term investment. As for now, Jumia is still losing a lot of money. The main challenges that Jumia faces is working on inventory management and shipping logistics. However, even with ongoing losses, the most compelling reason to give Jumia stock a hard look is due to one of the biggest global trends that hardly anybody is talking about. Africa's population is expected to double over the next 30 years, the sharpest growth anywhere on the planet. If current trends continue, Nigeria, which is one of Jumia's core markets, will have a larger population than the United States by 2050. In short, Jumia is focused on bringing e-commerce and digital payments to what perhaps is the fastest growing and most underserved regions in the world. This alone makes it an interesting and long-term opportunity as Jumia is well positioned with a growing global population. So you will need to demonstrate extreme patience when buying Jumia stock. If it pays off, it will take time. Second is Japanese e-commerce giant Rakuten, ticker symbol RKUNF. Like Amazon, Rakuten was founded during the late 1990s when the internet began to commercialize. For many years, it held the top spot in Japan as the largest online retailer and has since expanded overseas. The company reports having over 1.4 billion members worldwide. However, Rakuten has struggled to gain any attention in the United States, of course, because of Amazon. And Rakuten managed to grow its internet business last year during the pandemic, but by very little. Now, Rakuten sold $2.2 billion worth of new stock recently to aid in its fight against Amazon and to compete with Amazon. And as announced, it was selling shares primarily to postal and logistics company Japan Post, as well as Chinese tech giant Tencent and Walmart. Rakuten and Japan Post plan to double down on shipping services and will try to help traditional retailers adapt to new expectations that customers have in a post-pandemic world. Having the mighty Tencent as an ally could help its cause too, as Tencent operates in mainland China's largest social media network, WeChat, which is a super app that combines shopping, entertainment, payments, and a whole bunch of other services. Only time will tell if these fresh sale of shares will help Rakuten. But as of now, Rakuten is positioned to make a strong comeback, and the current share price is pretty attractive. And for more strategies and tips on money, investing, and creating financial independence, follow me on my Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get all my updates on my many fantastic investments. And comment below with what you think about these Amazon alternatives. Are you buying or staying away? And if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profits, especially if you are buying penny stocks, look at all those perks, right? Well, sign up with my Wealthsimple link down in the description box below for $25 of free real money to trade with. Link is below. Now, the third Amazon alternative is Mercado Libre, ticker symbol MELI. Now, over the last 2 decades, Mercado Libre's business has transformed from an online marketplace serving various Latin American markets into a commerce-focused platform. In addition to its e-commerce business, the company also offers fintech services, logistics solutions, financing, and other products to support its sellers. Together, Mercado Libre's various businesses create an end-to-end solution, simplifying virtually every aspect of retail. Mercado Libre is similar to Amazon since it operates a vertically integrated marketplace that also provides fulfillment and shipping solutions, as well as advertising services. Now, the online shopping trend is only just getting started in Latin America, as 57% of Latin America's population has access to the internet and only 31% have actually purchased something online, compared with the United States, where 75% of people have internet access and 72% have participated in an e-commerce transaction. As such, Latin America has a tremendous degree of untapped potential for Mercado Libre's marketplace. And Mercado Libre operates in 2 quickly growing markets: e-commerce and digital payments. Last year, both of these industries saw rapid expansion as the coronavirus forced consumers to work and shop from home. Today, Mercado Libre operates in 18 Latin American countries, though its operations are focused on 3 geographies: Argentina, Brazil, and Mexico. To put it in numbers, 5.8 billion people visited Mercado Libre's marketplace in 2020, while the next closest competitor, which happens to be Amazon, brought in only 2.7 billion visitors in those same markets. Mercado has carved out a solid competitive position, and it operates in 2 high-growth markets: e-commerce and digital payments. That's why I am keeping a close eye on this stock, because even after the incredible gains in recent years and the recent price drop, I think Mercado Libre has an amazing, bright future. Very bright. And the fourth and final global Amazon competitor is, of course, the Alibaba Group, ticker symbol BABA. Now, this is one of the leading e-commerce giants in China and one of the major competitors to Amazon. Over the last few years, Alibaba has transformed itself from being a traditional e-commerce company to a conglomerate that has businesses ranging from logistics and food delivery to cloud computing. Alibaba is often considered a solid long-term investment in China's booming tech sector. It owns the country's largest e-commerce and cloud infrastructure platforms. Its ecosystem extends across the advertising, media, internet, software, and gaming markets, and it consistently generates double-digit revenue and earnings growth. Unfortunately, in early 2020, China started expanding its antitrust laws, which had primarily targeted large foreign companies and its own domestic companies. In late 2020, the Chinese government forced Alibaba's fintech affiliate Ant Group to suspend its IPO. It also fined Alibaba over unapproved acquisitions and launched a formal antitrust probe into Alibaba's e-commerce business. Not only that, but Alibaba was also forced to halt its exclusive deals with merchants and its usage of promotional prices to attract new customers. And it was pressured to break up some of its media assets to stop its influence. And the big one, the really big one, to share all of its user data to the Chinese state. Let me repeat that. it is forced to share its user data to the Chinese state. With all these regulations attacking Alibaba, the share price has taken a massive hit. The bulls will claim that Alibaba's challenges are temporary and its recent price dip represents a rare buying opportunity. Unfortunately, the bears will say that the Chinese government is setting a ceiling over Alibaba's long-term growth, and the increasingly blurred lines between government and Alibaba could make it impossible for United States investors to hold the stock. But investors like Charlie Munger are bullish on Alibaba. Many investors follow Warren Buffett's every move, but many also pay close attention to his longtime partner and Berkshire Hathaway vice chairman, Charlie Munger. Recently, Munger turned some heads when it was disclosed that Munger had a $37 million stake in Alibaba, making it the company's third largest position behind Bank of America and Wells Fargo. So even though this stock might look like a bargain right now, as it is cheap for obvious reasons, make sure you do your own due diligence. So if you are willing to jump into Baba at these prices just like Munger did, just remember that it still has many challenges to work through with regulations. So Amazon is not the only Amazon out there. So if you are willing to do the due diligence and have a high risk tolerance with a long-term vision, these global Amazon alternatives could be your ticket to international gains. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profits, sign up with my Wealthsimple link down in the description box below for $25 of free real money to trade with. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my penny stocks, REITs, dividend, and speculative stocks from my portfolio and other investments I am currently buying and selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride 2021 together on a journey of health, love, success. So until the next video, stay ranting.